All right, welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in. It's halftime, right? We've just come out of the locker room. We're going to make some halftime adjustments. We'll see how good they are. But right now, let's take a look at corn. It was leaking lower, and we'll see how low it's gotten. Not too much. We're 1.5 cents lower right now. That's the March contract. 4.31 3/4 is last. 1.25 cents lower in the May to 4.43.5 now. But as you go out the deferreds, we lose a little bit more. 2 3/4 cents lower to 4.69.5. Man, will we ever see a 5 in front of that again? Soybeans in Chicago, let's take a look there. We were about 6 cents lower overnight, but we did pop going into the open here. Only about 2 cents lower, but you know what? We've kind of leaked lower since then. March now is down 9 1/4 cents to 11.84 1/4. I'm going to call it 2 3/4 cents off the low of the day there. We've got May down 9 cents to 11.90 3/4. All right, that's beans in Chicago. We also trade wheat in Chicago. Let's take a look at that contract. This is one that we've got some decent up arrows, 11 cents higher, double digits. March trades at 5.99.5. So the good news is it's up 11 cents. Bad news is we're trying to get that $6 handle again. Right now we just ticked it closer to it. We're 5.99 3/4, 11 1/4 cents higher. May's up 8 cents to 6.02 even. From Chicago wheat, we go to the Kansas City wheat. That's going to be the hard red. 2 1/4 cents higher there to that March contract to 6.03 1/4. You know what? It's about 9 cents from the high or low, and about 8 cents from the high. So we're going to call that right in the middle of the day's range. And we're up between 1.5 to 2 1/4 cents across the board when we talk about the hard red in Kansas City. Again, March trades at 6.03 1/4. May trades at 6.01. Moving along from the hard red to the Kansas City spring wheat. This has something for everybody, right? 1 cent higher in the March. 6.84 3/4 is last there. We're going to call that 4.5 cents off the low of the day. We're sharply unchanged in May at 6.83 3/4. And as you go out the deferreds, we have about a 3/4 cent loss in the SEP out there to 6.93 1/4. So spring wheat leaking a little lower as you go out the deferreds. Deese does not trade right now. It's sharply unchanged at 7.04 even. Finally, let's take a look at cotton. Cotton was the high flyer here today, and it still is. 231 points better at 91.41, and that's only 18 points off the high of the day. Let's bring in our next guest analyst. If it's Friday, it's Joe Lardy Day. He's with CHS up in Inver Grove Heights. That's the home office, right? That's where they cook your breakfast and lunch. Everything's great. You know, everybody was back to work. Nobody's working from home anymore, except for the big important guys.
Except for me, yeah.
All right. Are we going to wish our life away here, waiting for the March report, or what's going on?
Well, I think these markets certainly got a big dose of bearishness yesterday from the USDA, and I think these markets are going to really struggle. We need to find something that's going to turn these markets sideways, and I think the first opportunity that we might get will come next week at the Ag Outlook Forum, and the government could give us a surprise on acres. But you know, if they don't give us a kind of a crazy curveball, just what we're factoring in next year for corn and bean acres, these carryouts are going to grow and grow substantially. And unless they slash acres, I think we're looking at a pretty bearish outlook for a while coming up here. And you know, kind of the crazy thing is when you look at, we've got a carryout now that's over 300 million bushels in beans. Last time we had a 300 million bushel carryout was the 16-17 year, where we were at 302, and the average farm price that year was 947.
Stop it. Yeah, that's
sorry.
That's ugly. Yeah.
Sorry.
Well, you know, I was speaking to the Virginia Soybean Association a day and a half ago in Richmond, and you know, a lot of folks have had some pretty decent years, you know, the last couple, 3 years, and let's just say for even corn, you know, you get used to $7 and $8 sales. And then last year kind of melted away in your hands, and this year doesn't look much better, and that's a problem. They're all kind of frozen.
Yeah, and for a lot of people, you know, like you said, things have been really good. So marketing decisions have been really easy. The cost of money was really low. And this year, there's a whole different set of variables that people just aren't used to experiencing. Low prices, really high interest rates. You know, your financing costs are looking a whole lot different. So this is going to be quite a challenging year, and one that we haven't seen quite to this dramatic effect in a long time.
I agree with those interest rates. Operating loans, you know, you're going to be paying 60, 70 grand more per million this year than you were last year. All right. Thank you for that. I think it hurts, but we got to take it like it is. Appreciate you coming on. That's Joel Lardy. He's with CHS Immigrant Fights. We're going to go away. We're going to pay some bills, and we're going to come back, and I'm going to talk livestock with you in this jacket after this.